Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation. Any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, team. Thank you for being patient whilst we jumped on. I know we're running about 10 minutes late. It's myself, Alex, here from the financial planning team. Looking forward to sort of finalizing and giving you guys the last sort of episode in the asset allocation videos that we've been bringing to you over the last couple of weeks. So I know that, there's a few long weekends coming up. I think Queensland and WA miss out, but, for the rest of us, we should be all okay. Anyhow, I hope everyone's well, and let's dive straight into it. So, like I mentioned previously, we have gone through different types of asset allocations, and now we are coming out to our last one of the general ones, and that's the alternative assets. So that's, I guess, the theme for this morning's sort of question is, how alternative are you? Right. So ultimately that question is directed to your investments, personal, super, and whatnot. So I think that a lot of people don't really understand this asset class, or there might be a complete master in this class, because typically speaking, Alternative assets is not something that comes to your mind. Like I said in the previous weeks, you've got your shares, you've got your cash. Those things are kind of like, and property, of course. Those are the kind of the three main ones that everyone's like, yep, I'm an expert. I know exactly what's going on, or, I'm just going with the flow type of thing. So alternative investments are something that is completely different to your traditional assets. And I do have a couple of slides here. Let me just click through it. And good old Investopedia, they're awesome with providing definitions. So what is an alternative asset? It's a financial asset, does not fall into one of the conventional investment categories or traditional categories. So you might ask, what is it, right? So let's have a look at a couple of options. A good one is gold. Love gold. Gold is essentially a hedge that you typically hold within your portfolio for times when the markets are uncertain, and it doesn't give you any income, right? So it doesn't give you any income. Typically, or historically, you have to keep a hard asset. So like gold, you'd have to have a vault. So have all those measures in place. As of recent, you can get access to gold through exchange traded funds, which is nice and easy. So they're listed. But what I want to highlight here with this particular chart with gold, being an alternative asset, I would say that not a lot of investors have that in their portfolio. So, and the reason for that is because as an investor, you're looking for that return, and sometimes you want it to be relatively soon, like almost immediate, right? So, for example, with the property portfolio, you might be looking immediate return might be in the form of rental income, right? So every month you're getting a rental income, great. Long term, you're potentially getting the capital appreciation. Equities is quite similar. You're getting your dividends twice a year. And then again, you're looking for that long-term growth. With gold, so because it's working sort of in the opposite way, it doesn't give you income. You don't appreciate when things are not that great, and what it does is it can stagnate for a little while. So if we look at this chart here, you've got 2011 to essentially 2020, it did nothing, right? So it kind of went sideways. So you've got about 10 years of where your money essentially just sat there and were almost like an insurance, right? So you almost had 10 years worth of insurance sitting on the sidelines, costing you money because you do have to pay for the storage of this asset. It could be gold, it could be silver, any sort of hard assets that are metals of any sort. So, and then you look the last sort of 5 years, it has really ramped up, and you kind of start thinking about, well, what was happening during the last 5 years? Well, we had the pandemic, we had inflation, we now have uncertainty in the market, right? So really, if you look at it over 15 years, the asset class has done well. But again, not everyone's going to use it. So typically, it doesn't, as a result, it doesn't form a lot of your portfolio. So, what I'm seeing is 5 to 10% at most. And many investors don't even have exposure to this asset class. So what else? Bitcoin. That's probably the most recent one that I've seen being forming part of the asset allocation. So from our end, as financial advisors, we don't recommend it purely because it's such a new asset. But I'm sure in the future it'll become more standardized, and then we can include that into our portfolios as well. But for now, it's really client driven. But anyhow, what I want to show you here is that relatively new asset. So if you think about it, it's just under 10 years old, right? So it'll be 10 years next year. So, and you can see the rapid sort of growth in this asset class, but also the volatility that it created over that time. So, at the moment, it's sort of hitting its highs, which is amazing if you're holding this asset class. But again, it doesn't form part of your typical asset allocation that you can hold within your normal sort of portfolio personally or inside super. So when it comes to super, right, so let's just focus on that for a second, because personally you can do whatever you want. Essentially, you can get all sorts of assets and hold it in your personal name. When it comes to superannuation, you do have limitations. So if you look at things like industry super funds, so your Host Plus and Australian Super, you're unlikely to be able to purchase these types of assets. So the alternatives typically are you will have an alternative section within your asset allocation. So let's just say you're in the industry super fund, you'll have an investment that is called potentially My Super Balanced or Growth Investment, and that's about it. But then if you dig deeper, you can see that there's an alternative component to it. Just to sort of expand on that, a good example is CBUS. All right, so if you look at the CBUS Industry Super, you look at the investment composition, and there'll be a big chunk of alternative. And that's because CBUS does fund the projects that most of their members are part of. So doesn't fall into shares or cash or fixed interest, but it's an alternative asset. But you can't go and directly purchase that. It has to be sort of done by them. Retail, so with retail super, so it's sort of the next level up. You've got more options in there. You can get equities like we covered off a couple of weeks ago, but also alternatives like the exchange traded funds in gold. You can get now that in Bitcoin. So it's becoming more available to everyone, whereas previously that wasn't the case. But where you can really go and dive deep into alternatives is in self-managed super funds. All right, because this is a super fund that you are managing, and that is giving you access to essentially everything. As long as the trustee, which is the rule book for this super fund, allows you to invest into it, you can go ahead and do it, right? So what I've seen with my clients, some have art, some have classic cars, right? So these will all form part of the alternative assets that are sitting in there. Bitcoin, so again, client directed. All right, by the way, we've got a couple of people jumping on. Thank you, guys. I know we started a bit late, but good to see you. Hi, Murat. Morning. Jeff, talk about Bitcoin. Wow. Yep. It's been on. Yeah. Look at the roller coaster there. You had it sitting at 100 for a couple of months, and then it dipped, and now it's back up. 150, 160. So crazy time. So again, on the scale of risk with alternative investments, right, you're looking at a very high risk, but also very high reward. So, the alternatives don't stop just with these sort of types of assets. You can go down the private equity side as well. So things like IPOs. So, when a company lists on the stock exchange, that is called an IPO. So leading up to it. So, you can sort of invest into that as well. So before it becomes a company and listed company, it's still an alternative. So quite high risk, but also high return. Morning, team. Tim, sorry. You have a friend in New Zealand, sold up all his real estate and invested in Bitcoin. Yep. 20. Yep. Closest lowest point 20,000. So went 100K. Yeah, made 5 times his money. Yeah, absolutely, Tim. Yeah. Some people have made a lot of money on this. We do have clients that are sitting on a significant capital gain. The interesting thing is at the moment is that I don't know if this was covered by anybody else, But at the moment, there's a bit of a question mark whether Bitcoin is cash or whether it's an investment, right? Because ultimately, if it's cash, then there's no capital gain on it. But if it's an investment, then obviously the capital gain rules apply. And I know for a fact that the first couple of years, there was no capital gain because it was such a new asset. The ATO didn't really know how to, or it wasn't probably even on their radar to evaluate what sort of taxation that asset would incur, right? So let's see what happens, because that would be a very significant event, on whether it's a cash equivalent, so like currency like Australian dollars, or is it an actual investment class? So yeah, pretty cool, So if you look at the total composition of the asset allocation that we went over a couple of weeks, you've got your cash, super safe. You can see it, you can touch it, amazing, but it doesn't really give you anything in terms of capital appreciation or income, unless it's sitting in an interest account. But then, we spoke about things like inflation and what that does to that asset class. Fixed interest, you're going up a little bit on the risk scale, still relatively safe. You do have some riskier sort of fixed interest allocations like to corporates and whatnot, but typically government and term deposits are relatively safe. Again, the government could be, depending on the government, of course. Property, you guys will be very familiar with that. You know what the risks are there. Big investment, typically good cash flow, potential for growth in there, but also there's some assets that don't grow or stagnate, so I'm just got to be aware of that. So again, you're going up the risk scale there. Equities, high risk, high return. You do have your mixture of blue chip, your Commonwealth banks, BHPs, things of that nature. So by the way, Commonwealth Bank hit $300 billion in valuation yesterday, the day before. So one of the highest valued companies in Australia. So significant moment for the ASX, really. So again, you've got different styles there. You've got the smaller sort of companies that are just coming on, and you've got established ones that have been there for a little while. And today's topic, alternatives, right? So like I said, your sort of commodities, your Bitcoins, your, art, anything of that nature. So anything that doesn't fit the first sort of four asset classes, that's where this would go, right? So very powerful asset class, very underutilized with the majority of clients, purely because of the complexity, right? The nature of this asset class requires, significant amount of education and also, risk to be in it, because you could make significant amount and it can make significant difference to your end destination, or it could definitely burn you 100%, and then you'll never want to invest again. So look, that's the asset allocation sort of in a nutshell, right? Over the last several weeks, we went over it. So if you want to go back and watch those videos as well, I invite you to do so. So I think what we'll do in the future is we'll probably look at how can we now put together a portfolio knowing the basics of the asset class, right? So let's discuss that in the future weeks. So thank you for jumping on, guys. I hope to see you next week at the Property Summit. So if you're there, come around and say hello. Otherwise, if I see you, I'll also say hello too. So should be a cool week. Next week, I think I'll be in Gold Coast by that stage. So I'll be coming from a different destination live to you guys. So from me, have a good weekend. Have a good long weekend if you're anywhere but WA, Queensland. And we'll catch you all next week. Thank you. See ya.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live